Good morning, everybody. It's Chris from Serene Education with the four majors news update for the 3rd of October 2013. Good morning, everybody. Looking at the four majors this morning, starting with Euro against US dollar. Remember, we're going into non-farm payroll this week, or this Friday, tomorrow. So today, we're going to have a lot of news out. Going into that session, we've got a lot of Euro news as well as the US market news this afternoon. No German. The Germans are off on a bank holiday today, and we also have a bank holiday for the Chinese markets, it seems. Otherwise, what else have we got this morning? To start off with, we've got the Halifax HPMI results for sterling, followed by Spanish service PMI, Italian service PMI, and this retail sales month-to-month figures, plus the 10-year bond auction for France and Spain. That's all for Europe. And then this morning for the UK market, we have service PMI results, followed by this afternoon we have the unemployment claims and the non-manufacturing PMI results, plus FOMC statement, FOMC members speaking this afternoon for the US market. So there's quite a lot of news, guys, before we go into non-farm payroll tomorrow. Okay, so what happened yesterday? Well, yesterday we had a nice breakout to the upside on the daily, which is what we wanted. I've mentioned all week we've been trading this consolidative range. We did need to see a confirmation candle, especially on the daily. We had a number of attempts, and I'll just zoom in so you guys can see this. We had a number of attempts of this resistance level here, primarily a spinning top, followed by another spinning top, followed by another indecision candle. Then we had a lot of wicks, a lot of small bodies, but a lot of wicks to the upside around this area here. I've just went for the psychological round number here, primarily because on the 4 hour it really stands out. But you can see the prior day, very exhaustion, really exhaustive nonetheless. However, the RMA was still making higher swings or histograms, but clearly our MACD was below. So no trade on that particular day because there wasn't true sentiment behind it. We wanted to see a nice bullish engulfing candle, and that came through. We had a nice bullish engulfing candle close above this resistance level. So now she's making effectively another swing high. It's taken a long week to build a swing, but it's not, nonetheless it's swinging higher and getting above this resistance level. Fantastic. Now we have everything in our favor, and you can see the ultimate long-term sentiment as well as the intraday very much in favor of upside. Yes, our 5 and 15 minute charts aren't really showing anything at the moment, primarily because we're still slightly consolidative, but it's still nonetheless moving higher. So move to our intraday time frames. We should be looking for buying opportunities. Straight away I get a buy signal on my 4 hour time frame. My hourly is also complementing that. You can see the last 4 hours building on that consolidation we saw after the breakout yesterday. So the last 8 hours in particular, you can see we've seen a little intraday support level here being forged. Fantastic. Now it just needs to kick on, and my first target of call will be my weekly fib level, which is a healthy 109 pips away to that level in front of me. But just be aware, we are going to non-farm payroll. A lot of things happen on a Friday, so just be aware of those targets. So if you can, still look to the upside, as the buying sentiment still favors longs. That we had a breakout yesterday on the daily, so look for any buying sentiment to the upside for this particular pair. Moving on to sterling, here again we wanted to see a nice close above the weekly fib, and sure enough, if I just zoom in so you guys can see it, we had an indecision candle the day before. Okay, still moving higher, but closing above the weekly, but we want a more genuine candle than this exhaustion candle, and sure enough, yesterday we got one. Not closing higher than the entire body, but nonetheless still finding support on the weekly fib here at the 23.6 level at 16,200 and change. So still making swing highs, which is good. The overall sentiment on this one still looking positive, but we've got a bit more negativity intraday popping up, and very consolidated nonetheless. You can see not making higher highs since yesterday's high. In fact, RMO is still making histogram highs. However, the MACD is clearly below as we've moved higher. You can see this one over here and this making a new high. However, these two are genuinely showing some sort of divergence. Apologies. So if we go down to our 4 hour time frame, you want to see that weekly below. Fantastic, the weekly fib. Okay, however, you can see straight away that price is finding resistance at yesterday's resistance levels. So clearly what we want to see now is price breaking up, but you can see straight away if this was genuine moving higher, this ideally should be up above, but it's not. It's clearly below. So we're seeing a bit of a false pretense here in this setup, or this high. So the only thing that's going to really get rid of that is the fact that we get a close above it. If we do see a bearish engulfing candle here on the next 4 hour candle, then we should be looking back towards our 23.6 fib weekly fib, which is 36 pips away. This needs to be above, guys. It's clearly not. It's not. I mean, it's working back to the zero. Don't get me wrong, but it's clearly not above it. It is consolidative. However, as we're testing prior highs, we want to see this moving higher just to show its genuine sentiment. So be very, very aware of this one. We do have this morning. We have the Halifax HPMR figures. They're expecting a slight expansion on that of 0.2%. Then we have service PMI results later this morning at 9:30 a.m. GMT, which is a really important one. They're expecting a slight contraction on that figure, guys. So if it comes out as expected or even worse, then we could see sterling falling a little lower. Sterling falling a bit lower against US dollar, and we could potentially see a trade for euro sterling cross. Let's move on to the US dollar Swiss franc. Here again, if the euro is moving higher, we won't see the euro Swiss franc moving lower. Indeed, the last 4 days, in fact, we've seen a lot of consolidation, and we wanted to see a bearish engulfing candle. In fact, we got it yesterday. The prior day was a hammer on a support, and if that was to be a genuine hammer, we wanted to see a bullish engulfing candle to the upside. That failed to materialize, and we saw a bearish engulfing candle, and that taking us below this consolidation level here on the last 4 days. And now you can see not much movement since on the Asian session. So if we drop down to our 4-hour time frame, just make this nice and big, you can see price is still making swing lows, which is good, which is important for a natural negative trend. And you can see all our moving averages in favor. You can see the ultimate overall, the template is telling us we should be looking for negative sentiment. The R squared is complementing that negativity. Our 5 and 15 is looking a bit positive at the moment. Now we're seeing consolidation. So yes, we saw a breakout, which is great. However, that breakout not really breaking the lows we saw on the hammer low, which is not really effective. We do need to see a more genuine candle, and that needs to take place in order for us to start looking at those weekly and monthly lows down the bottom here, which is a healthy 120 pips away as our first initial target. So consolidative, still moving low, don't get me wrong, but still very, very much consolidative to the downside. You can see we're going to a wedge pattern, a squeeze as we head lower. We are not seeing lower lows on our RMO, and our MACD is below, but it seems to be running out of gas is clearly what I'm trying to say. So as we head into non-farm payroll, this could be forging, I'm not saying it will, it could be forging a very strong support level here. The only indicator that's going to give is obviously we have a nice bullish engulfing daily close, and then what we should be doing is looking back towards our institution moving average and back towards our weekly fib to the upside. So here, consolidative to the down, still negative. Just got to be well aware of where that sentiment lies. US dollar Japanese yen, here again, not making higher highs. Clearly over the last couple months, in fact, making lower highs. Not being able to actually move higher, even after actually using the institution moving average as support. Bouncing on it, but not making higher highs. Not clearly moving higher, and subsequently what happened just recently, that overall sentiment pushing price lower and heading back into the institution yet again. So we had 1, 2, 3, 4 bounces on the institution, but the last couple of days we've seen that institution moving average being breached. And this is the first time, guys, this institution moving average on the daily has been broken since last October of 2012. So a significant indication of negativity for the US dollar against Japanese yen. However, the saving grace could well be the weekly fib here at the 23.6. Notice that yesterday we saw a lot of selling into that level. However, on the Asian session, we've seen a genuine bounce higher. So this is to be negative long term. We do need to see this weekly fib level here being breached. If we don't see it, there's more likely for price to bounce yet again, and we could see price trading within the consolidated range. So very, very important. The overall sentiment is still looking negative. We have a red arrow, red candles, institution being broken, all the moving average above price, which is lending itself to more negativity than positiveness. However, you can see we have a lot of indecision on our charts overall. We have the RMO and the institution moving average not really working all together. And then we have a lot of negative sentiment long term, but positive sentiment intraday, and the R squared is comping both of that. So we are very much in a consolidator range. However, it's in a negative setup. Okay, we should be looking for negative sentiment. The only thing that over here that's stopping us from going any further to the downside is primarily this weekly fib. We do need to see that being broken. We just got a sell signal on our 4-hour as I moved into that one. Sorry. Will we get that negativity candle, the bearish engulfing candle on non-farm payroll? Question mark. That's what's got to happen. We don't, and the US dollar has a lot of favorable news yet. Tomorrow. That could see the bounce, and we could see price moving back up to these current price swing lows as our first targets. So very, very important. If this to be to maintain negativity long term, we need to see this weekly fib over here being breached as soon as possible. The longer it fails to, the more likely we're going to see consolidation, and more likely to be more positiveness for the US dollar, especially if you're going to non-farm payroll. You can just have to look and see if those non-farm payroll figures come out and they are complemented for the US dollar. Then we could see a knee-jerk reaction, buying high again, biting and go target your price swing lows, especially here back up towards your monthly, back up to that trend line support. Okay, so that's it, guys. Short and sweet. There's a lot of news today. I did mention that. Please be aware of it, guys. First week of a new month is very, very detrimental because we have a lot of volatility out there. There's a lot of speculation as we head into non-farm payroll. If you are new to trading, you don't want to be trading that volatility, that speculation, because it will tear you up and spit you out. It's far better just to stay on the side, get a clear directional counter from what happens, and then trade that outcome. Okay. The longer you've been trading, the more aggressive you can, and you primarily could do it. But for all those newbies out there, I don't recommend trading it, primarily because of all the speculation that happens, and there's a lot of wickiness and a lot of risk has to be factored into your trading. And if you're trading with a small account, it's not worth the hassle. Okay, so I'll leave you with that. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.